Good afternoon and welcome to the New Vision Grain Marketing webinar for January 2001. A new year, and with COVID situations still going on, we've had to resort to these type of meetings rather than face-to-face, and I think everybody's getting a little more used to it. We're anxious to get back to meeting you one-on-one, but that'll come in the future as we go forward here. We'd like to cover some topics today following the USDA crop report that came out last Tuesday, January 12th. Here's going to be our agenda for this webinar. We're going to go back to January 12th to the final crop production report. Remember, there were a number of reports that came out that day. Also, the grain stocks in all positions report as of December 1st. And then finally, the supply and demand tables that were updated in this report. Reading some of the commentary after this report was released, one person termed it this way: these series of reports was really a trifecta or a three-time winner for the corn market. And we'll talk about that quite a bit as we go forward here. We'll take a look at the USA corn and soybean exports, the current status. How are we doing? Actual inspections on exports versus our export sales. How does it look like things are going to go in the next months as we go forward here? We'll go down to South America to get updated production estimate numbers on the corn and soybean crops in Brazil and Argentina, and then look at the 2020-2021 La Nina. The current status and what's the outlook weather-wise? What are the meteorologists saying about this thing as we go forward here? Will it continue to impact the South American crop? And could it possibly impact the USA crop in 2021? Then we'll go over to China for a little bit. China's been a very aggressive buyer of US soybeans, US pork, a little bit of ethanol, a lot of US sorghum, and a lot of discussion on where do we go forward here. There's a recovery going on in China now out of the ASF, or African swine fever, which they've been fighting for the last couple of years. What does that mean to demand, both in the near term here and down the road? We'll take a look at that. We'll look at the corn and soybean price and basis outlooks, both on the old crop and the new crop side. Now that we've turned the calendar into 2021, it's time to be thinking about what are we going to plant in 2021. And with the recent rally we've had in corn and soybeans, definitely some opportunities out there as you get ready to make those planning decisions. Also look at some grain marketing opportunities. And since we can't do this face by face, if you have questions or comments, they're more than welcome. Please feel free to submit them by email, by phone to one of our originators, or through our office, or text message. And we'll share the contact information at the end of the meeting. As we get into the report, I thought a couple of slides were appropriate to show. And this is actually from a webinar that Arlen Suderman from StoneX put together. And he started the presentation on the January 12th reports with one of these slides here. And this really just shows, if we looked at the commodity sector, we can see that over on the near term here is right on the right-hand side is where we're at right now. When we had this dip down low where everything was negative with commodities, that was when COVID really hit hard this past year, March, April, May, in that period. But as you can see, as COVID has kind of came out of itself and we've seen strong demand come into the US for exports, we've seen the commodities gradually start to rally. And of course here, this line here on the commodity index showing what used to be support. And once we take that support out, it becomes resistance. Now you see we worked our way through, we went through the line of support, went up and tested the former resistance that we had for many years, for about the last 5 to 6 years, and now actually trading above. That's the sign of hints of inflation with commodities. And that's something, of course, that can give us better prices as we go forward here. And then if we look at another slide that has to do with what's going on in the grain markets right now, especially on the export side with the USA. Here's a long-term chart of the dollar index. It goes back all the way to the year 2000. First of all, you can kind of see that the dollar index tends to cycles. We put in a high, and then about the same time frame, we'll put in a low, then we go back to a high. So it looks like right now, we're in a phase right now, potentially, where the US dollar is going to remain weak for a while here. Keep in mind that a weak US currency makes us more competitive on the export side, makes our exportable products like corn and soybeans and meat and all of those products, ethanol, more attractive to the buyers in the world. Okay, now let's get to the report on January 12th. I just wanted to share a couple of slides from the USDA packet as they put the report information out that showed how this information was gathered. First of all, you see the sample size was 77,706. Those were farm surveys that were sent out and returned, and the information tabulated off of that. And then about 8,400 facilities, that's your warehouse licensed elevators and grain companies throughout the United States like New Vision, each get a form and required to report what the grain is that they had on hand as of December 1st. And then on the field surveys, you say there were just under 4,000 actual field surveys done to finalize the crop production numbers. Here's a map that shows that the breakdown of the 77,000 surveys that were returned. And you can see a pretty good cross-section across the country, just under 3,000 out of the state of Minnesota. And your main states typically have higher numbers than some of your more minor states as far as crop production and grain storage. So here's the first slide now on the USDA report from January 12th. This is our crop production numbers and yield numbers that were released. Now keep in mind this January report is the final crop production and yield report from the USDA for the crop 2020 that we harvested last fall. I'll point you through this slide. On the very bottom line here, previous USDA estimate. Remember, there was not a yield or production estimated updated in the December report. So this goes back to November. At that time, average corn yield projected at 175.8. Now we see the lowest trade estimate as we went into this report. What's the trade expecting? The highest trade estimate and the average trade estimate. So the trade was looking for the corn yield to drop about a half a bushel down to 175.3. USDA released a yield in these red numbers across the top here, 172, a reduction from the November estimate of 3.8 bushel per acre. Folks, that's the largest change in history from November to January for a corn yield. That's trifecta number one for the corn market. Then we looked at the production number, 14.507 was the corn production number for this total crop in the November estimate. Average trade was looking for that to decline slightly to about 14.47. USDA number came in at 14.18. So that's a drop in production from our November estimate of 325 million bushel. That's substantial, friendly to the corn market. And that's why we've seen the corn market trade sharply higher once this report was released. On the soybean side, the November estimate, the last estimate by the USDA, 50.7. Going into this report, the average trade had quite a wide range, all the way from 49.4 to 51.7, average of 50.5. So they're looking for about a 0.2 of a bushel reduction in yield. USDA number came out 50.2, down a full half a bushel. Now this wasn't quite as major, but it definitely took the soybean production number down from 4.17 to 4.135, a drop of about 35 million bushel. Here's our state-by-state map of how these yields were changed. And all of the states in green, for instance, Minnesota, Illinois, Indiana, all green states had a higher yield in 2020 than 2019. So for instance, in our great state of Minnesota, ended up with a final yield of 192 bushel per acre statewide, up 19 bushel from a year ago. Nationwide, the 172 bushel yield that they gave us, up 4.5 bushel from last year's 167.5. So, definitely, as you can see, more green states than yellow. Iowa actually down 20 bushel per acre. And of course, that had to do with the derecho wind event that went through there towards the end of their growing season. We look at the soybean side. National average yield now 50.2. That's 2.8 bushel per acre higher than last year's national yield. So you see overall, both corn and soybean crops better than last year, good crops. And if you look at all of the green states here, once again, all the states in green, higher soybean yields in 2020 versus 2019. Your state of Minnesota up 5 bushel at 49. Iowa once again affected somewhat by a flash drought in some areas, and also the wind event. Down, soybean yields actually down 2 bushel from a year ago. If we look at the major states that had significant changes to bring these yields down to this degree, I think this is kind of interesting. And look at your state of Minnesota. From the November to the January report, USDA took off 10 bushel per acre on corn. Remember in that November number, they had given us an all-time record yield for the state of 202 bushel per acre. Likewise on soybeans, 2 bushel per acre taken off of the Minnesota soybean yield. I think we actually found in our area where most of the crops were about what people expected, and in a lot of cases actually better than what they expected. So apparently other areas of Minnesota affected more as late harvest reports came in this year. You can see though, almost all of your main states, Illinois down 3, Indiana down 2, Iowa down 6, South Dakota down, I think 3 on corn, 1.5 on beans. So all of your main states were down, and that fits in line with the numbers that the USDA gave us in this report. Okay, item 2 of the reports on the 12th were our quarterly grain stocks report. Now, these are the stocks of grain that are in position as of December 1st. Doesn't matter if it's on feed bank, if it's on delayed price, if it's cash ownership, it's what we have on inventory. That's what is to be reported from the farm surveys and also from the commercial elevator surveys. Now, we're just going to touch briefly here, and very little will be said about wheat, but you can see that wheat stocks from last year, now we compare this to December of a year ago, since this is not done monthly, it's just done quarterly. And to get a perception from markets, you really go back to the last report a year ago. 1.84 on wheat stocks then, 1.67 this year. So even wheat, which has been a very bearish commodity lately in the US, actually seen stocks reduced a little bit year on year. On corn last year in December, on the December 1st stocks report, 11.327 was our stocks number. Going into this report, the trade was looking for about 11.95. And once again, here's trifecta number 2 for corn. Grain stocks lower than expected. And in fact, if you look at the change from what the average estimate was to the actual number, that's a reduction of 629 million bushel. Less corn on hand than what the trade thought that we had. That's bullish to the corn market. Once again, a reason why corn was sharply higher after these reports were released. On the soybean side, a year ago, 3.25 billion bushel stocks on hand on December 1st. Too many beans. Prices were low. We remember what that was like. But now we've seen good demand. Exports have been very good. Crush has been very good. Crop not quite as good as what we had thought it was going to be. Remember, they took a 0.5 bushel off. So the average trade estimate was 2.92, down from a year ago. And the USDA actually came out slightly higher at 2.933. So a little bit of negative, but just the fact that it was close to the trade estimate and lower than a year ago, didn't really see much of a bearish reaction on the soybean side. Now the USDA also gives us maps here on how these grain stocks line up. So here's our total main states of corn and soybeans that we'll look at. Here's last year's number at 11.327, this year 11.322. So nationwide stocks pretty much unchanged, just a 6 million bushel lower is all. Now on this particular map, the states that are in green, for instance, like Minnesota, you can see 1.2 billion bushel of corn on hand on December 1st, this year 1.3. So all the states in green have higher corn stocks, total corn stocks, than a year ago. Now they also break this down between what's on the farm and what's already been moved off of the farm. And stocks were basically about unchanged, but you can see here the on-farm stocks down slightly nationwide from 7.103 a year ago to 7.046 this year. 62.2% of the corn still on the farm on December 1st. And I think that fits in with what I think a lot of people were expecting. It seemed like the American farmers sold more beans as they harvested and shortly after harvest because the market on the soybean side started rallying earlier. This is probably good news. If we had this much corn on hand in the farmers' hands on December 1st, as the market rallied through December and January, good marketing opportunities. On the soybean side, our stocks number last year at 3.25, this year 2.93 nationwide. So as you can about imagine here, now we turn most of the states to yellow, meaning that the soybean stocks totally for the states are down from a year ago. Really only South Dakota where soybean stocks are slightly higher. Minnesota down from 293 a year ago to 270. On the on-farm portion, Once again, total or on-farm stocks 1.519 last year, 1.308 this year. So on-farm soybean stocks also down slightly, about 44.6% on the farm. So definitely indications that as the market had anticipated, more beans moved by the farmer than corn as harvest wound up here in 2020. Our next slide, we go to the ending stocks. Now remember, the USDA crop year runs from September 1st to August 31st of the following year. So this is what they're projecting to have for ending stocks on August 31st, 2021. Once again, we'll just touch briefly on wheat. In the November estimate, or this would be December now on the supply and demand estimates, 862 million on wheat and now projected at 836. So even stocks in the US are starting to come down a little bit. We've actually seen China, a pretty good buyer of US wheat, looking for the higher protein products. So that's been supportive to the wheat side. On the corn side, in our November estimate, 1.007702, excuse me, that was the same estimate that they used in the December one, really no change there. The trade was looking for that to come down. We've seen a good export program so far on corn, a lot of sales on the books. So the trade was looking for that to drop to about 1.599 or roughly 1.6. USDA came out slightly lower than that, about 1.552. So, you know, it's a sign that demand is still strong. Our ending stocks are shrinking. And that's kind of like trifecta number 3 in the corn market. Another reason why we were sharply higher, we had lower yield, lower production, and found more demand because that was what was shown in that lower stocks number. On the soybean side, 175 was the ending stock estimate both in November and December. Trade was looking for that to drop to about 139, mainly because of high exports that we've had a higher and faster pace than what we had projected originally. And the USDA came out real close to the average trade estimate at 140. So you can see all ending stocks estimates slightly lower on all grains, and we had a very positive day. Corn market up the limit at times, you know, after that. In fact, it locked the limit in a lot of the months. Soybean market, aggressive follower also. Now let's look at our supply and demand tables. And here's the corn one. And actually, we have to go back to the last crop year to talk about the balance table changes. Because in this report, which was totally unexpected, the USDA came out and actually increased feed and residual for the last crop year. This was the crop year that ended on August 31st, 2020. And they increased that feeding number, 76 million bushel to 5.903. No other changes. So that 76 million additional demand bushels came out of the ending stock number, changed from 1.995 now to 1.919. Now, what's important about that is, of course, the ending stock number for this crop year becomes the beginning stock number for the next crop year. So when we look at our table now for the crop year that we're in, the one that started on September 1st, 2020 goes until August 31st, 2021. Here's that 1919 now becoming our beginning number. We had seen the USDA in this report reduce planted acreage 0.2% or about 200,000 acres. No change in harvested acres. And people were concerned a little bit about the harvested acres. They thought the harvested acres may be lowered in this report because of the derecho event that affected the corn crop in Iowa and Illinois. Now they made the yield adjustment, but left harvested acres unchanged. Here's our 3.8 bushel per acre yield change from 175.8 to 172. That took 325 million bushel out of the supply side of this table. So the combination of the ending stock change from last year and this crop production change or yield change in this report took 400 million bushel out of the supply side of this equation. Now, this is Washington math. I can't explain this. If I add 76 to 325, I get 401, but in Washington, they get 400. Probably just a rounding error that they correct as they go through this. So the supply side down 400 million bushel. What do they do to demand? We know prices are sharply higher versus a month ago and versus 2 months ago, and prices sharply higher after this report. In this report, the USDA reduced feed and residual 50 million bushel to 5.65. They reduced ethanol 100 million bushel, 5.05 to 4.95. And that's probably legit. You know, still a lot of concern about the fact that we're still in the middle of this COVID crisis. People are traveling less, they're driving less. We didn't even drive as much as we normally do through the holidays. So they're concerned about that. And of course, as this corn market has rallied, that makes it increasingly tough for ethanol plants to grind a lot of corn, and even a lot of talk now about possible slowdowns. We're not seeing the demand for the gasoline because of COVID, and now we have higher prices. That's going against profitable margins for the ethanol industry. On the export side, this was a surprise. USDA also reduced corn exports 100 million bushel from 2.65 to 2.550. Now remember, in previous reports, they had been very aggressive about raising that number. And we're still seeing decent corn sales, but the inspections that we'll look at in a little bit here still are a little disappointing. So, you know, there's a lot of questions as we go forward here. Bottom line is, on this supply and demand table for corn, 400 million bushel taken out of the supply, 250 million bushel reduction in demand. So the net change to the ending stocks that we had in December and November, 1.702 down to 1.552. That's very close to what the trade was thinking. The trade was looking for about 1.559. But if you talk to people about what they actually believe, the trade, I really believe right now, with prices where they're at, they're thinking that the ending stock number is closer to 1.2 to 1.3 billion bushel. They're having a hard time on the feeding side, believing that we seen the USDA raise last year's corn to 5.9 billion, but now lowering it in this year to 5.65. That's 250 million bushel lower. Now, granted, we're going to have higher ingredient prices, but as we come out of COVID, there's also the potential for more demand, both in the US and for exports. So there's questions on that feeding side. Unfortunately, we will not get another update on this feeding one very likely until the March stocks report. So there's a lot of time to go here. Ethanol, I think the trade is pretty comfortable with this number. They think this is very achievable. In fact, if we happen to see the vaccine be very successful and the recovery come quicker than expected, some people would like to say that they think we can stay close to this number of 5.05. The export side is where the biggest question is, though. The US still has the cheapest corn in the world through at least April and possibly even into May at this point in time. We're seeing a lot of struggles with Argentina as far as exporter strikes and currency situations, and they're just not doing a lot. There's been talk that they're going to suspend exports or limit exports to protect their domestic prices. We've seen now talk of Russia and the Ukraine possibly putting export taxes on wheat, and now since the report, even talk of an export tax on corn. US is already competitive, and that would mean they'd be more competitive. So I've seen estimates on this export side of corn rather than 2.55. A lot of the commercial people think this thing could be 2.8 to 2.9 billion bushel. That's why they think this 1.5 number still has a tendency probably to go down in future reports. But we'll have to watch our exports closely because that's what it's all going to be based off of. In this report, USDA finally taking this average farm price from $4 a bushel to $4.20. Now, I realize we're $5 here at various times here at New Vision for corn, so we're well above that. Keep in mind, this is an average that would go from September 1st to next August 31st. We've already had some months of cheaper prices. Now, as we go forward here, if the prices stay good, that average farm price will continue to work its way higher. Now, we always like to talk at this point about this stocks to use ratio, because it's a very key element as we go forward here. And we want to take a look at that again to see once how things are coming on corn. Remember, to find your stocks to use ratio, you take this ending stock number, this month 1.552, and divide it by your total demand or use of 14.575. Right now, that would come out with a stocks to use ratio of 10.65 on corn. Now, here's a StoneX chart that shows where the corn market really tends to get excited and want to take prices sharply higher. We're at about 10.6 right now, so we're right in this area about here. You see, really for this corn market to go extremely high, we would like to see that stocks to use ratio get down to 9% or less. We're not there yet, but if you look at what some of the commercials are believing, that we will see better exports than what's in this table, you know, if you take that ending stock number down to 1.2, your stocks to use ratio is going to be about 8.1, 8.2%. So I think maybe in some ways the market is anticipating that these exports continue, that the usage is higher, and that in future reports, the USDA actually takes that number down a little bit more. So as we look at historical perspective here, I think it's important, and this is a perspective thing that I think everybody should be aware of, because a lot of people are going to say, well, you know, they finally got it right. We've got better prices. But look at what caused this price change. Let's go back to just June of this past year, June 2020, in the USDA crop report. For this crop year, ending stocks were projected at 3.3 billion bushel, stocks to use ratio at 22.4%. Do you see what's happened now? As these ending stocks come down and our demand stays strong, these ending stocks come down and the stocks to use ratio also comes down. So now where we're standing right now, 1.552, we've cut the ending stock projection in half, and now the stocks to use ratio down to 10.6. Things are getting more positive, and we've definitely seen that in the price. Over on your far right-hand side, and this is an average of 5 different companies that were contacted. This particular slide comes from Jerry Gerlach, person I've worked with since 1988, does excellent job with analysis for the markets. 5 of his contacts put their numbers together. They really believe that eventually this ending stock number gets all the way down on the average to about 1.2. That would give us a stocks to use ratio of 8.16 and would definitely put a fire under this corn market to probably take the next leg up. Right now, there are some people that think if you really believe the ending stock number is 1.5, the corn market may be a little bit overvalued right now at this point in time. Here's our supply and demand table for soybeans. Once again, just a few minor adjustments made in the last crop year's table, the one that ended on August 31st, 2020. Exports were actually increased 6 million bushel, probably just the difference between the census and the FEGAS numbers, but you know, that's just a minor adjustment. They also lowered residual 7 million, so we had a increase of demand to 6, a decrease of demand to 7. That to me gives a -1, but when they looked at the ending stock number, they changed to 2. So once again, Washington math probably has to do with rounding. Now the ending stock number for the last crop year that ended on August 31st, 2020 at 525 million bushel, that once again becomes the beginning stocks number for the crop year we're in right now. So these numbers on the ending stock numbers of soybeans, once again, what's projected to be left over on August 31st, 2021. In this report, the USDA made no changes in planted or harvested acres. Here's the half bushel yield reduction that we talked about earlier from 50.7 down to 50.2. That took 35 million bushel out of production, out of the supply side of this table. The 2 million bushel change from last year's carryout, so we had a net change. Now the USDA also made a change here on imports. And each year we tend to import a few soybeans, not in a big way, but it's more of its logistics, you know, rather than moving across the country. Sometimes it may be easier to buy from a neighbor in a different country. USDA definitely saying with the high prices, we're probably going to need more beans from foreign soil. In fact, there's a good chance we'll import some beans out of South America, and I would expect to see that happen if this balance table is correct and even gets tighter, as some believe. This has happened before, and this is something to watch closely, because just the threat or the confirmation that we are importing beans, it also always seems to throw a little bit of a scare into the market. So be aware of that as we go forward. USDA increasing imports of beans into the US, 20 million bushel in this report. So the net change to the supply, we dropped the supply down 14 million if we add all of these together. On the demand side, some friendly news. Soybean export raised up from 2.2 to 2.23, up 30 million bushel. We've seen a very aggressive pace, especially from the Chinese, and they continue to buy. It's just a matter of how long are they going to continue to ship in this crop year, because we're getting closer and closer to the availability of the Brazilian beans and the harvest there. Residual in the US, also decreased 13 million bushel. So we look here at the changes, difference in supply of 14 million, difference in demand of 21 million gives us 35 million off of the ending stock number, which was 175 in the December S&D, now down to 140. Average farm price, 10.55, raised up to 11.15, up 60 cents a bushel. Once again, keep in mind, some of these prices go all the way back to September 1st. We didn't have prices like we have today then. So this is an average for the entire crop year. Now let's look at our stocks to use ratio on beans, because here it gets real interesting. And this is why you have such a dynamic soybean market right now. If you divide your ending stock number of 140 by your total demand of 4.555, your stocks to use ratio on soybeans right now is 3.07, getting extremely tight. It's no longer a yellow light flashing caution to the soybean market. It's a red light saying, Houston, we have a problem. We have to slow down the usage of soybeans here, or we're going to run out. It's not feasible that we will run out, so we have to use price and basis as a combination of things to discourage users of soybeans, to slow things down, not to bring that demand back into line. You can see if we look at Arlen's chart from StoneX on how soybean ending stocks influence prices, you can see that once the ending stock projection or stocks to use ratio gets down to about 7% with soybeans, you go up rapidly. Well, folks, now we're down to 3.07. So we are definitely in a danger zone as far as soybeans. So the soybean market now has a mission to make things hurt enough to end users that they look to use something else other than soybeans, something to ration the demand. Now, if we look at how the soybean complex has changed, here's the same type of chart that we looked at on corn. And if we go back to May of 2020, ending stocks for this crop year were at that time projected at 405 million bushel. A stocks to use ratio at 9.3%, average cash price of 8.20. As we've seen the demand come into this market, look at this, in August still projected at 610. Then it starts coming down as we had some crop issues, as China became a very aggressive buyer, and all of a sudden now we've went from 405 in May, 610 in August, now down to 140. Stocks use ratio at one time during this crop year was projected at 13.7%. Now it's 3.07. And we definitely see the improvement on the price side. Now here's the same 5 analysts that were surveyed saying, what do you think this number is going to be when by the time we get to August 31st? If we average all 5 of those together, the average estimate is 99 million. That would be one of the tightest ones that we've ever had. I think in my career, I've seen it one year where that got down to projected at about 96. When you get down to that level, you'll hear people talk about, well, we can't get that low because that's below pipeline stocks. And at some point, we have to once again ration demand or import more beans because we can't let our stocks get that low and run our industry, provide soybean meal, provide soybean oil for the demand that we have. If that were to happen though, a carryout right around 100 million bushel, all of a sudden that stocks to use ratio is down to 2%. So the soybean market has a mission right now to take the prices high enough to ration demand and cut back or slow down the usage. Let's go to exports and see how things are going there, because the export piece of this big puzzle of price and the relationship of ending stocks going to have a lot to do with exports as we go forward here. Let's start with corn. On the top, we have the corn export sales. And each of these blue lines are the weekly export sales. The export sales come out each Thursday about mid-morning. Now, keep in mind the USDA current projection, 2.55 billion. So we've had some very good weeks here. In fact, our corn sales, we're on pace that if we ship everything we have sold, we'll exceed that 2.55 billion bushel projection or estimate by 314 million bushel. This is through week 18, so that's about a week ago. But we have to make sure all of those things get shipped. And I think what you're seeing is the commercial side, since they think the carryout's closer to 1.2, they believe that we will continue to make sales and that the sales will get shipped. Now the challenge though, when we look at this bottom chart, this greenish line right here, follow the cursor, you can see it kind of ends here. This is through week 18. And this blue line above it is where we need to be on a weekly basis to meet the current USDA projection at 2.550 for exports. You can see that up until about week 16 or so, we hadn't been up to that line once. So while we're running at a sales pace above the projections, right now, if we continue to with the actual inspections, what's actually loaded out, we'd end up 83 million bushels below what the USDA is projecting. So what we need to see is this seasonal thing, which typically now as we get into the spring and summer months, we see corn exports pick up out of the US. As the world goes to South America for soybeans, it seems to be a nice trade where they come to the US for corn. That needs to happen. Good signs here the last few weeks where we've been above the line, but we really need to see some big numbers on the export side as we go forward. The export inspections report comes out each Monday morning, mid-morning. So keep track. Sales on Thursday, inspections, export inspections on Monday. Now here's another reason why I think the commercials are still kind of excited about what could happen with this corn market on the export side. This chart compares the prices of corn that would be imported by China from different sources. First of all, we want to look at this grayish line across the top. This is if you're a user of corn in China and want to buy China corn from the Chinese government out of their warehouses. You can see that right now it's going up for over $11 a bushel, US cash equivalent. Now down here you see a lot of the suppliers of corn. For instance, the green and brown line right up here, this is Brazil and Argentina corn. Corn out of the US Gulf is this kind of brownish line right here. Corn out of the P&W from the US is this blue line. So once again, this chart shows that our corn is cheapest of the world if China needs to buy corn. Now, from an economic standpoint, look at this, folks. This is corn delivered into China, $8 a bushel. It's $10 to $11 a bushel if they buy their own stocks. This is an economic opportunity for China. The problem is it goes against what they've been telling their people, that they're 95% self-sufficient on feed grains, including corn. So the Chinese hierarchy has a problem here. If they were to go out and buy all of this cheaper corn from the world, they're sending the wrong message to what they've been telling their people. So that's why you have a big difference of opinion as far as what the Chinese demand for corn is from the world. Right now, the US has a number pegged in about 17.5 million metric ton. Some people think that could be as high as 30 million metric ton. So we have to go forward and wait and see what happens on the corn side. A lot of questions as far as demand by China, but once again, the US is the cheapest source of corn in the world. Other buyers will come and buy our corn, and that's why exports look to stay strong and need to pick up the pace as we go forward here. Now on soybeans, we have a different situation. Once again, here's our week-to-week blue line sales of soybeans. And actually right now, our sales, we're 291 million bushel above the pace of meeting that 2.23 billion bushel export number the USDA gave us in this report. So it's a very front-end loaded program on soybeans, which makes sense because Argentina has been struggling and they're not making as much meal and oil. They crush most of their beans. But it seemed like Brazil had exported beans at such a fast pace, even though they had a large crop last year, they ran themselves out. And the world had to come to the US if they needed beans. So a lot of sales on the books. And the shipment side of soybeans looks the exact opposite of corn. Here's that green line that shows week-to-week actual inspections. And this yellowish line below it is what we need to be on a seasonal pace. See, just the opposite of what we saw in corn, where we hadn't been above that seasonal pace line at all. Almost every week we've been above it by a large degree on soybeans. So our shipments, if we were to continue at the pace that we've made through the first 18 weeks, we'd end up 350 million bushel above the USDA projection. Well, that can't be, because if that were to happen, we would be negative carry out or ending stocks in August, and that won't happen. That's one of the reasons why we've seen the price do what it's done here the last couple of months. Big question now as we go forward, though. On soybeans, you can see the shipments tend to tail off very drastically as we get into February and March, April, May, June, and through the rest of the summer. Why is that? We all know Brazil is starting the harvest of soybeans now, and as soon as they can get them into an exportable position, right now for February, Brazilian soybeans are much cheaper, to the tune of about $10 to $15 a metric ton, cheaper out of Brazil than out of the US. That's going to shift demand to the Southern Hemisphere. So this is very important, how long we stay above this line. Keep in mind, we've heard a lot of talk that Brazil planted a good share of their soybeans about 2 to 3 weeks later than normal. That pushes the harvest back. So if we continue to see good soybean inspections through the month of January, and let's say even through half of February, that's what a lot of the people think it'll probably happen before we see Brazilian as an aggressive competitor in the export side. You know, that continues to nibble away at this ending stock number. That's why you see a lot of the commercials here and hear a lot of talk about, well, yes, the USDA gave us a 140 ending stock number, but we think it's closer to 120 or 110. The whole important piece of that's going to be, how long does the Chinese continue to take shipments as we go forward here? And here's a slide on this China soybean export program out of the US so far this year. You can see here, 28.4 million metric ton already exported and shipped. You can see these blue lines, that's as high as we've ever been with China, higher than before the trade war. And here's a trade war that started in 2018. There's our actual shipments to China then. A little bit of a rebound last year as we started getting phase one into it, and now this year, very, very aggressive. Some of this is phase one. We believe, the industry believes, that this is more that China has a very big need for soybeans and even for corn right now as they rebuild their industry after African swine fever. Now, here's the thing that's a little bit scary. 5.1 million metric ton, these orange bars are unshipped commitments. So these would be sales that are on the books that haven't been shipped yet. Now, and we don't know, will China cancel some of these? They've done it in the past. Will some of these contracts be rolled forward? Now listed as old crop sales, but then changed to shipment in September, October. See, that affects the balance table for this year. So this is still a big variable. Right now at a 5.1 million metric ton, you know, that's around 180 million bushel. That either can get shipped or get rolled or get canceled. That can change the balance tables as we go forward here. Let's look quickly at global ending stocks. And just once again, we'll glance at wheat and see that the previous estimate, now this is in million metric tons out of, rather than bushels, 316 in our last USDA report, now down to 313. Wheat stocks in the world, a little bit lower than what they have been. Corn, 288 in the last report, now at 283. Ending stocks on corn for the world globally, getting smaller. And we even see that on soybeans, and even with a better crop in Brazil this year versus a year ago, problems in Argentina, not quite as big a crop in the US as what we thought. So ending stocks are a little bit tighter on all of our grains from a global standpoint. Here's our production numbers from South America in this report. And once again, at this line right here, here's where the USDA was with their crop estimates in the last report in December. So for Argentina, we see they lowered their corn estimate from 49 million metric ton to 47.5. Soybeans 50 in the last report, 48 in this report. That is the effects of the La Nina. Argentina tends to have production issues during the La Nina, and we're seeing that this year. Now, usually about every Monday, R.J. O'Brien has a contact in Argentina, and they will give us a little bit of an update via a phone conference call. And their numbers, they think the corn crop as of last Monday, about 47 million metric ton, slightly lower than the USDA. There are private estimates that say if this weather pattern doesn't change quickly in Argentina, we could actually see that number drop to 45 to 46 million metric ton. On the soybean side, 48, they're thinking more like about 47. So the people on the ground in Argentina thinking that the crops are still being hurt by the dry conditions and could come down a little bit lower. On Brazil, last estimate was 110 million metric ton on corn, lowered 1 million metric ton in this report to 109. That's still a big crop. That's still enough corn where Brazil will be an aggressive competitor as we go forward here. And on soybeans, 133 in the last report, left unchanged. This is an all-time record crop. Last year's crop was, I think, around 126 million metric ton. So actually the potential for a bigger crop than a year ago out of Brazil, it's just being harvested a little bit later than what we were used to. Here's a slide that we've looked at before. This is Argentina soybean production in a La Nina, and the red circles you can see from year to year tend to cause production issues when we have a La Nina in Argentina. So let's talk briefly about the weather. Here's a current map from about a week ago on where the La Nina is at right now. Remember, the La Nina looks at the equator, that's that zero line right here. And if we draw that across, it looks at the sea surface temperature off of the coast of South America along the equator. When we see these blues, that's lower than neutral, lower than normal sea surface temperatures. And the darker they are, the more intense the La Nina. Remember, if you have above normal, like these colors, then you have the El Nino, which tends to have a whole different set of circumstances. One thing to point out there, right along the equator, if we were to look at the same map that we looked at about a month ago when we had the December webinar, you would have seen pretty dark blue colors, more like what we have here. You know, definitely more intense than what it is. So are we seeing some easing? Is La Nina kind of phasing itself out? And if that happens, does this give a possible weather pattern change to South America in the next 2 to 4 weeks? Well, here's some of the weather maps that people are projecting. And if we look now at Argentina in that period out here, if this actually verifies, we see better chances of moisture, actually a little bit of dryness starting to show up in parts of Brazil. So a lot of water to go under the bridge yet as we go forward here with crops as we wind up the South American crop that they're hopefully going to harvest here in the next few months. Let's also talk briefly about weather in the US. This is a drought monitor map from about a week ago. Definitely shows that the western half of the United States in drought type conditions. In fact, exceptional droughts in a lot of areas. We've had temperature situations out there. We've had very dryness. Of course, we don't raise a lot of crop out here. But look at what's happening in parts of northern Illinois and Indiana. Look what's happening now in about, I'd say a little better than half of the state of Iowa. Look at Minnesota and classified as being abnormally dry. And, you know, I think a lot of people would agree with that. Nebraska, you know, so granted, we're not raising crops this time of the year either, but folks, we're not too far away. In just a few months, we're going to be wanting to plant crops. And I realize that old saying, plant and dust your bins will bust, but you still have to have moisture to get that crop growing, or you have to have timely rains. So as we go forward here, I think we're definitely in a weather market right now, watching what happens in Brazil and Argentina, but we're not too far away. People are keeping a close eye on US weather, because now with these ending stock numbers coming down, weather becomes more important. This was a slide that Arlen shared in his webinar after the January 12th report. And keep in mind, folks, I know the comments, you're going to say, well, the weather forecasters can't get the forecast right in 24 or 48 hours. You're telling me they know what's coming in 5 or 6 months? Well, but they're always looking at these models. And here we see a couple of different models here up on top. Here's your temperature on top and your precip on the bottom. And as you get into these oranges and reds and everything, those would be temperatures above normal. And they're just projecting out long-term models. This would be rainfall, temperature and rainfall for June, July, and August of 2021, when you folks in Minnesota are going to be trying to raise corn and soybean crops. The one model, which they're not putting a lot of stock in, this isn't a forecast, but right now it's showing much above temperatures during that time frame. In the European model, which tends to be a little more conservative, also showing quite a bit of high temperatures in the heart of the Corn Belt in that time frame, which definitely we know can affect our crops. And if you look at the precip side, both models kind of agree. You know, these areas of green and blue are moisture. But when you look at Iowa and Minnesota, both models have what? Gray or brown or white. That would tend to mean below normal moisture. So if you look at a long-term forecast, they may not be worth a nickel, but the indications are right now we could be starting out dry, and we could have some temperature and moisture challenges as we go through the growing season. So something to keep in mind. Here's a slide that the USDA included in this report. And I think once again, it's a perspective thing that we need to be thinking about as we go forward here. Possibly as you look to make your planning plans for this spring and also your marketing plans. Now, this year we ended up with about 310 million, what they call principal crop acres. Now this will include most crops, corn, beans, wheat, sorghum, cotton. I think there's like 8 different crops that they put into this. So we rebounded quite a bit this year. Remember in 2019, we had a lot of prevented plant, record type prevented plant acres in a lot of states. And we've seen total principal crop acres drop from 2018 to 319 million down to 303 in 2019, and then rebound to 310 in the crop that we just harvested 2020. But look at folks, prior to 2018, we were consistently doing about 319. So in the eyes of the marketplace now, there's about 8 to 9 million acre gap here, still from the 2020 numbers, where we could find more crop planted. That could be a little bit of a caution. Now, if we don't have good weather, it probably doesn't mean as much, but if we plant more, it could put more supply available to the markets. And definitely now, with corn and soybean prices and sorghum prices and wheat prices doing what they're doing, and cotton prices also, there's going to be a battle for acres as we look to plant this 2021 crop. And million-dollar questions as far as what's going to happen. R.J. O'Brien put together some rough projections for 2021-22. Now, this would be the crop year that starts this coming September 1st, goes until August 31st, 2022. And their first look is over here way on the right-hand side. So you can see they're projecting corn acreage to go up about a million acres. Now, a lot of people would say, well, it should be more than that. We can sell $4 plus corn off the combine. But keep in mind, your soybean price is also higher. So if you look at crop projections as far as profit and loss nationwide, there's a pretty good indication that people are going to probably plant as many soybeans as they can. But this looks at a million acres of corn, looks at trend line yield of 178. And here's something interesting. With demand staying pretty strong in their projections here, our carryout doesn't change that much. Even with a million more acres, we're still at about 1.6, stocks to use ratio about 10.9. Well, let's look at the same thing on soybeans, way on the right-hand side. Here, RJO is using a 7 million acre increase of soybeans. So remember we had that gap of acres, that 319 to 310. We're picking up a million corn, 7 million beans. That pretty much fills that gap. So we add 7 million acres, trend line yield of 51 on the beans. Demand is actually nothing real. Demand stays about the same on exports and crush. Our carryout stays at 140. Our stocks to use ratio stays at 3.1. This is why you're seeing a hard time when, even if we get a little bit of negative news in the market, you're seeing the market having a hard time of correcting lower, because when we look out into the future, it looks like things still could stay relatively tough. Let's talk a little bit about China. Here's a picture of what's being constructed in China now, post ASF, post African swine fever. This is one of their modern commercial hog facilities. This is a swine farm. You see they have their own feed mill, probably their own energy plant. All of these are high-rise production units for swine in China. The Chinese government learned very quickly that the old way of raising pigs and meat in China, where each farmer had a few pigs and they fed them table scraps and things like that, that's had a lot to do with what caused African swine fever and the spread and the devastation that they had and the record high meat prices. So as they emerge out of ASF, this is what's coming. A much more modern facility. Farms like, I think in this case, projected to have over 21,000 sows, high-rise apartment buildings for pigs. But this is what they're going to. Now, you can say, well, that's really bad because that's going to hurt our demand. Well, keep in mind that in the old days, they were feeding scraps and they were feeding whatever they had to the pigs. Now in these type of facilities, the rations are going to be more like US rations, soybean meal, corn, which actually could increase their demand for products out of the US as we go forward. High margins that they've had, the companies that still had pigs that they could keep alive, they made a lot of money. So, there's money to invest. The government's behind it because they want to give the impression to their people that they're self-sufficient. Hog production, Stone believes from their people in China that they're at about 80% of pre-ASF levels. If you listen to the Chinese government, they say they're at 90% and almost recovery. But the weekly crush of soybeans exceeding 2 million metric ton 23 times in 2020. That's where the demand is coming from. So they're not necessarily buying beans from the US because they like us, because of phase one. They're buying beans because they need them. And as they come out of ASF and have this demand, we've already talked about their record prices of corn and very, very high still yet today. Crush margins are also very good as they buy these whole soybeans from the US and crush them. Now, Arlen believes in his webinar, when he talked about this, their crush margins look extremely high compared to normal, but you have to keep in mind if they had bought beans 2 months ago or 3 months ago, and now those are the beans they're crushing, of course they're going to show big profit margins because of what the market has done. Still profitable, still running, very good. Now here's a slide from China that kind of shows the possible disparity and why there's so many differences. What is their demand? Is it 10 million metric ton on corn? Is it 17 or is it 30? Here we look at production of corn in China, and they were projecting, that their crop again this year is around 260,000, but their demand is closer to 280 to 290. So there's a gap of about 28 to 30 million bushel between their projected usage and their projected production. Now, they used to rely on government stocks, but over the last few years, they've been reducing those stocks. So a lot of people in the world industry believe that China has to fill this gap of about 28 to 30 million metric ton. But be careful about assuming that that has to be corn. We've seen China be a very aggressive buyer of US sorghum, barley, not only from the US, but other parts of the world. So they're looking at alternative feed grains other than corn to fill that void. Now here's another way, and this is a little bit more of a longer term perspective, but this looks at yields and converts them all back to metric ton per hectare. We can see the US highest in the world about 11.3. We see China, one of the lowers, at about 6.19. In fact, their corn yields right now are only about 56% of what the yields are in the US, in an area where the climate isn't a whole lot different. Now, one of the things that the market believes is holding back the yield increases in China is the fact that they've been very strong and strong advocate against GMO, genetically modified seed. Just this past week, more varieties of GMO grains were approved for production in China. Keep in mind, they want to be self-sufficient. They do not want to depend on the rest of the world. And if they improve their method of farming, there's definitely room for improvement on the corn yield side. And just to convert that into other terms so that we understand it maybe a little bit more, if we converted that to acres, bushel per acre, their yield is about 99 bushel per acre in China, whereas this last report had the US at 172. This map says 176. That was last month's numbers when we looked at them. There was a webinar here about a week or so ago by Purdue, University of Purdue, and they had a speaker on there that's a native China. He was born and raised in China, still has family there, but now he's a professor at Iowa State. And he brought us interesting points that I thought would be just quickly sharing here. They really don't anticipate, what he's hearing from China is they don't anticipate a lot of major changes with the new administration coming in under President Biden. Trade policy is probably not going to be the immediate priority of anybody. Countries are still more concerned about COVID, about international coordination and to make sure that doesn't happen again. Paris Accord. Lower your expectations on tariffs. Remember China, as soon as the election was kind of finalized and President Biden, or candidate Biden was named the winner, China was right there saying we'd like to renegotiate phase one. Well, they it doesn't hurt to ask, but they really don't know that that's going to be as much because the Democratic Party as a whole has had a pretty hard line on how we deal with China. So maybe they're not going to roll back those tariffs quite as quickly as what they would like to see. There's other sources of tension that are probably more important. Human rights in China, the relationship with Hong Kong, the South China Sea. So, they didn't, from what this professor is hearing from his contacts back in China, they really don't expect major changes in how the US and China trade relationship goes. When China needs product and the US has product, they will buy from us. If they can produce it themselves, or if they can buy from other countries, they probably will. Here's Arlen's slide that he always starts his price talk with. How are commodity prices calculated? Well, it's a function of supply and demand, but it's overridden by the supply of money. So we really need to look at what are the managed money people doing? What are their positions right now? These are the report. This is from the CFTC report that came out this past Friday. Remember, the CFTC reports, they're reported on Friday, but it's the positions as of Tuesday. So these would probably be the positions that they thought and then adjusted to where the trade thinks they're at as of Friday. Current position, going home last Friday, long about 385,000 contracts in corn. That's just about as long as what they've been. They were a little bit higher here day before, but a lot of volatility since the crop report on the 12th. I leave this on here just as a perspective check. Keep in mind that just last August, before this corn market really started rallying, they were short almost 200,000 contracts. So a huge swing in positions here. They've definitely bought into the talk about crop issues in South America, about increased demand out of the US, about possible dryness in the US as we look to plant the 2021 crop. A lot of these people are on board. Remember, they're long the market. So if and when something changes or doesn't look like it's going to come the way they want it to, or this market seems to have topped off, they have a lot of bullets to sell. We have to be well aware of that as we go forward. Soybeans, 148,000 contracts long as of Friday. We go back to mid-August, they were long about 47. There had been a lot of talk about Chinese demand, phase one. So a lot of this on the soybean side isn't new news. And look at this, folks. If I've heard some technical people that watch these things very closely that are kind of concerned about this. Look at their position as of December 22nd, long 229. Now they're long 148, but what has the market done since the end of December? It's went sharply higher. It's a little bit of a caution sign when you see the market rally, and this is a different topic, but we've also seen open interest decline. When you see a rally and declining open interest, that's a little bit of a caution sign for an investor. So we need to watch this very closely. I'm not saying that the party's over yet, but there's a little bit of a caution sign on the soybean side. Let's look at some of the charts. We'll start at the daily chart just to get an idea on the nearby positions, and we always like to talk about the RSI, the relative strength index. Remember, a rule on there, if it's above 80, the market is overbought, possibly due for a correction down. If it's below 20 on the RSI, possibly oversold and due for a correction. Where are we at? Well, you can see for the last couple of weeks here now, and especially since the crop report, we made new highs the day after the crop report. RSI was 92. If we were going face to face, I'd be asking you, what does that mean a person should do? And as we said here, it's probably overbought, possibly due for a correction. But in this type of market, you can see we've been kind of rallying sharply here, new highs, everybody's excited. Word of caution, RSI above 90. We have to be careful here, folks. If you have grain to sell, it's all right to make some sales. Just go incrementally and keep selling as the market rallies a little bit. To get a better idea of what this market could do, I think we have to go to the monthly chart because the weekly chart just doesn't give us a big enough perspective. And as we said I think we talked about this in the December webinar, 440 had been an area of major resistance for about the last 7 years. We've cleared that. In fact, day after the crop report, we made it all the way up to 541. So we've cleared a lot of this resistance, 464 in 2019, 439 and 16, 438 and 15. Folks, we're in high price territory here. We're in an area that we don't spend a lot of time and we don't get there very often. So what about going higher from here? I think for that to happen, we're going to have to see some of these things that we're wondering about, continued problems with Argentina corn production, with Brazilian corn production. There's talk of it being dry in Russia and Ukraine, possibly limiting production there. We need some of those things to keep bubbling in the market and to actually see some strength on the inspection side. We need to see big export sales on corn, and then we need to see those inspections really start picking up. This market has built a lot in on anticipation, and now we have to be really careful as we go forward here. If we look to some of the other really high-priced years, 2011, 2012, keep in mind we had a very serious drought going on as we went through that time frame. Could it happen again in 2021? Anything can happen, but we have to be careful if you're sitting on old crop grain. Now, for the acres that you're considering about planting this year, here's a monthly continuation chart, and this would be only December futures. So this is December futures or the new crop side. And so far in January of this month, we've been up to 465. You see, that's just about matches where we were last year in 2019, but we're well above some of these other areas. And these would be prices now that you're looking to sell for corn that you plant 2021 spring, harvest this fall. I know it's hard to make sales, but we're at good levels right now. And it might not be bad to be looking at or keeping in mind, especially if this market would try and take another leg up at some point, get some protection on the crop that you'll be planting this spring. What about soybeans? A nice uptrend as we go back all the way into August, and it hardly seems possible here, but if we look at that August low on August 10th, 869.5, and this last week we traded at 1438.25. A rally of $5.68 in just a few short months' time. This is demand, this is crop problems in South America, but we've also made some very high prices up here. And look at our RSI on soybeans. Once again, trading well above 92. Word of caution as we go forward here. We go to a monthly chart of nearby soybeans to kind of get an idea of where this market could go. And we talked about this at our December webinar. A lot of times when the market gets up above this $10.70 to $11 area, all of a sudden there's just not much to stop us to go to 12, to go to 13, even to go to 14. Because to get us to that point, we have to be in the situation that we're at this year. Remember that stocks to use ratio, 3.1%. That's too tight. The market has to see that 7% or above to be comfortable. So the market's very nervous, and you'll take this market high enough to shut off demand and ration the usage. Now, what has happened in the past? Well, you can see in 2014, it took $15.36. In 2013, $16.30, $17, almost $18 in 2012. Am I saying we're going to those numbers? I don't think anybody is right now. But for right now, apparently, until our demand starts going the other direction, we may not be quite high enough. But it has to be watched very closely. Here's the new crop side of soybeans. Once again, we've taken out some highs of the previous years, and we haven't seen new crop prices like this since way back to probably 2014. So keep a close eye on these new crop ones, both corn and soybeans, as we go forward here. Here's our closing price page for New Vision as of this past Friday, January 15th. Now remember, there's no markets on Monday the 18th in honor of Dr. Martin Luther King Day. So markets will resume trading 7 o'clock Monday night. What is the market telling us when we look at this? Well, first of all, it tells you, wow, folks, these are great prices. You know, you look into the summer months, 509 for corn in June, July, August, and September. So if you still have corn on the farm, unsold, what is the market telling you? Well, now that we're in January already, you know, you can probably justify still selling the carry. It's only about 12 cents a bushel, but that gets you into better weather and a better price. And that way you can be proud that you're selling $5 plus corn. But, you know, honestly, if we see demand hang in here, I think these nearby prices are going to stay relatively firm. We are in a weather market based a lot on South America. And we all know from past experience, weather markets will be very, very volatile. They'll give you heartburn if you let them. So, there's nothing wrong with selling product as this market rallies and taking advantage of what the good Lord's given us here. What about the new crop side of corn? 420 off the combine closing on Friday. Once again, if you look out into the summer now of 2022, 17-cent carry. Now, I've seen it a lot wider than that, but with low interest rates or very cheap money right now, you can probably afford to look to sell the carry too. So, we're definitely not at these type of levels, but the market is trying to make itself believe that we're going to plant more acres, have better weather, and solve this supply tightness on corn. We're not going to run out of corn this year, but definitely a different picture than we were looking at last spring, as we looked at earlier when that carryout was projected at almost 3.3 billion bushel. What about soybeans? 13.72, a good price. Oh, remember the average price on corn only projected at 420 right now for this crop year. So, we're well above that. I think it's 11.15 on beans. We're well above that. What is the market telling us on old crop soybeans? Well, there's about a nickel carry to February and March. If you wanted to sell that carry, for on-farm stocks, that's fine. But look at this. As we get to April and May, all of a sudden the market starts to invert. Why? Because we're probably at that point anticipating major competition out of South America, soybean export inspections dropping drastically, possibly cancellations or contracts being rolled to the next crop year. So we're starting to see the pressure of South America here. And then as you get into June and July, another 14 cents lower. Into August, another 47 cents lower. The market's saying right now, if you're holding beans, waiting for a better price, right now, today, don't overstay your welcome. Look to keep them fairly current as we go through the spring. Now, we haven't talked a lot about basis, but we've definitely seen a little bit of weakness on the corn side as this market has rallied. Still respectable basis levels. 2,300 the July for next summer is a decent basis level, and that could stay strong. But the big question, I think, on the basis side as we go forward here and some of the weakness on the nearby is we're definitely putting a squeeze on the ethanol industry. And if the ethanol industry decides they're going to run at 50%, or you hear of plants shutting down, all of a sudden the demand for corn domestically goes down. That can pressure our basis. What about soybeans? This soybean stock situation on beans is so tight that if in fact our ending stock number is at 140 today and it goes to 120 or less, or goes closer to 100, we've seen in past years that when that happens, soybean basis can get to be very, very volatile. Other years we've seen that thing go to 50, 60, 70, $1 over, because they're trying to get that last bushel of soybeans out of the farmer's hands or out of the elevator's hands. These basis levels right now are very, very lukewarm. There's nothing special about them, but we also have future prices in Chicago over $14 a bushel. Now, as we go forward here, you may have an opportunity for better basis levels out here, but we have to be careful, because if that doesn't happen, the market right now is telling us today to be a little bit careful. What about the new crop side? This is something to be very aware of, I think, as we go forward here, because these high prices will cure what? High prices, right? We're going to encourage more production, not only in the US of corn and soybeans, but globally. And if you look at the new crop bean close on Friday, $11.28 off the combine. You say, well, I've got storage on the farm. I'm going to store them and bring them in next summer. The price for June of 22 is $10.69. That's an inverted market of close to 60 cents a bushel. What is the market telling you? Sell the beans off the combine. Take cake when cake is passed. Okay, some take-home points, and I apologize. This gets a little bit long, but I thought there was a lot of information to share. The good thing about these webinars, I've had different producers tell me, if we get tired of listening to you, or if the phone rings, or it's time to take a lunch, or I have to use the restroom, I can pause this and come back and watch it and not miss anything. So you can do that with this too if it gets to be too long in one sitting. Here's some take-home points from StoneX, from Arlen's presentation that he had on the 12th after the crop report. Perfect storm may be in the making for wheat. That is something we haven't talked about for a long time. Wheat's been negative, prices have been negative for many years.
But now we have dryness in Russia, the main exporter of wheat in the world, the largest exporter. We have concern about dryness in other areas of the world as far as wheat production. And we see good demand of, especially from China, and high protein wheat. And it just seems like these carryouts on ending stock projections on wheat can get a little bit tighter and cause some interesting things in the market. Corn, for a long time, has been a follower. It was following soybeans. It has a story of its own now. Remember the trifecta we had in the reports on the 12th. Record drop of corn yields from November to December. Record shortfall in December 1 stocks, 625 million bushel less than what the trade was expecting. Record Q1 feeding of corn. So, corn now has a story, and it will be fighting wheat, sorghum, cotton, and soybeans for acres in 2021. That battle will be a strong one here, and we'll get updates as we go forward. Big pattern reversal on the weather side is a possibility in South America. In fact, if that happens and verifies, we could see rains in Argentina, and then dryness starts setting in Mato Grosso. Mato Grosso is the #1 soybean producing state in Brazil. So that'll also be watched closely as we go forward here. Soybean stocks will remain tight the way things look right now. We raise a lot of beans in South America. We raise a lot of beans in the US, but China demand continues to grow. Projected to be well over 100 million metric ton of total imports from both the US and Brazil and other countries as we get into that crop year 2021-22. So the demand's going to stay strong. Follow the money flow. Right now, the money is behind this market and they are long. As we wrap things up, I wanted to share this with you. This was a prayer that our pastor used a week ago, and it struck a lot of people in such a way that in today's service, he actually had it printed in the bulletin, and I'd like to share it with you because it's a prayer for our turbulent times, especially in this country. 2020 was a challenge with COVID, with all of the political stuff that we had going on. And there's just a lot of stress in this world right now. So if you join me here, this is a prayer for our turbulent times. And always keep in mind, we have a friend in Jesus. Heavenly Father, we thank you for the grace and mercy you have shown to all people, especially in sending your only Son to be our Savior. Be with us during this time of sickness, fear, and doubt. Let your word bring comfort and hope to all who hear it, calming fears and providing strength for each day. Give our leaders the wisdom to make decisions that will help our people with their earthly needs and protect us from all harm. Help us through this difficult time. Provide peaceful days ahead. Remind us to love our neighbors as ourselves. In the name of our Lord and Savior Jesus, we pray. Amen. And something we all know, always believe in the power of prayer. As we wrap things up here, here's just a map of New Vision's trade territory and facilities. We have a pretty large footprint that goes all the way over to Marna on the east, all the way over to Hills in the west. We do a lot of business with customers in South Dakota and Iowa and our great state of Minnesota. We'd love to be a part of your operation. We live and breathe our theme and our motto every day to provide service and value every day that we're here. On the grain marketing origination team, we have a new addition, Hillary, who is replacing Jim Dan Artog, who retired 31st of December. Joel and John, all of these are available. Their contact information is here. Please feel free to give them a call, talk to them about a marketing plan, talk to them about the various things the division has to offer. Thank you very much for your time to be a part of this webinar. Special thanks to all the New Vision employees that help out to make this a success. It's a different way of doing things, but we enjoy it and we want to continue it. If you'd like to contact me, here's my contact information. Questions, comments, positive, negative, we're open to everything else. So with that, we'll probably be back in front of you again following the February supply and demand report that comes out probably about the 10th to the 12th. I'm not sure the exact date right now. And then as we go forward into spring, hopefully this thing eases up and we can be back to face-to-face meetings. But we think it's important enough to be a part of your operation. We'll continue the webinars as long as we need to. With that, thank you for your time. Have a safe winter and looking forward to working with you this spring and the new year of 2021.